Hey everybody, Tom Gentile. Welcome to today's program. YouTubers, glad to have you with me again. Another live stream. It is Tuesday, October 19th, 2021. Wow, October 19th. Why is that an important date? I think we all know. That was a day, I'll let you know, back in history for me. That was a day back in 1987 where I lost my entire account and then some. That was a day where if you want to see all the blood come out of my body, that was the day to do it. Didn't have computers. I was actually doing phone orders at the time, and I could not get out of a trade I was upside down in fast enough during the crash. Therefore, what I ended up doing was taking a big loss. I ended up taking a year to pay my broker back because I owed my broker so much money, and during that time decided whether or not I really wanted to do this for a living. I did. Here I am. Lots happened between now and then. And what I want to teach you is what I've learned over those past years and years and years. I mean, it's, this was 1987 when this happened. And we're so far down the road from them, but we've got better technology. We've got the ability to enter and exit orders right off of our smartphones, computers. We have the ability to know more than we ever did with transparency. But guess what? Some things still remain the same. And so what I want to do is teach you about rules-based trading. You guys all know what we do here. We spot rules-based opportunities. We create alternative risk trades, and then we plan, execute, and manage those trades. That's what we do here at The Room. Today, I want to focus on a couple of things. Number one, we're going to get to cryptocurrencies. That's the first thing I want to do. Let's go ahead and let's look at the crypto watch right now. Crypto watch, what I mean by that is we popped above 63,000. We have not been that high since spring. We'll get into the whys on that a little bit later in the program, but I want to talk about crypto. I want to talk about stocks. It's really going to be stocks and crypto is the first thing I want to get into. We're going to talk about cheap and expensive options. I'm going to actually look at the expensive options today. And then finally, I want to get into trading straddles around earnings. All right. I'm going to show you one we did last week. I've got one or two that I'm going to be sharing with you today. All right. The only things I want to mention, guys, is that number one, stock options and crypto, they all have great rewards, but they also come with great risk. So keep that in mind. Also keep in mind that I'm not your money manager. I'm not an investment advisor, okay? I'm here to educate you on how it is that I navigate the markets and how I trade the markets. I'm one of those two-fisted type of traders. I like to be an owner, but I also like to be a trader. Why can't we do both, okay? So why can't I have both? And that's another concept that we'll talk about here in the room today too. So let's bring up the screen and let's talk about what's going on in the markets. Right now, we're seeing Bitcoin, really starting to move out and do some breakouts. What's causing Bitcoin to run up again? Now we're getting, we're above 62,000, and what's causing all this right now? Well, if you take a look, and this is a one-day candle, and you can see here we jumped up to 62, and this was on the 14th. The 15th we were close. The 16th we were close. Yesterday, we again got close to 62. Today, we bounced up a little bit above 63. This could be a sell the news moment. And the reason I say it could be a sell the news moment is because, take a look, for instance, what's going on right now, guys. What's going on is that we've got new Bitcoin ETFs, which are coming into play. So let me throw them up on the screen here for you. What you see here is I pulled this off the Bloomberg terminal. It was a day or so ago. And what you're seeing is all of the potential Bitcoin ETFs that are coming up on the board. Count them there. You've got 3, 6, 9 of them that are projected to come on board between now and the end of the year. So the ProShares Bitcoin Strategy ETF launched today. All right. It got approval. It launched today. And I believe that might be the sell the news moment where we're getting a quick little pop in the market. But hey, it's not over yet. Invesco Bitcoin has their strategy that's supposedly going to be launching here very soon. So is Valkyrie's. So is Van Eck. That's just in October. In November, we see Galaxy coming out with their Bitcoin strategy ETF. Advisor shares. These are in November. And then Bitwise will come out with its by the end of November is projected. Also, BlockFi and Kathy Wood's ARK Fund want to create their own Bitcoin future strategy as well. Now, all of these strategies revolve around Bitcoin and revolve around Bitcoin futures, which are now traded. They're traded on the Chicago Mercantile Exchange. And so Bitcoin futures are a leveraged instrument. In fact, if you buy one Bitcoin futures contract, that is a contract that allows you to purchase 5 Bitcoins. It has the leverage of 5 Bitcoins. So buying one contract means you're buying 5 Bitcoin. Buying one contract means it's going to cost you quite a bit more. In fact, the leverage on Bitcoin futures right now is actually less than 2 to 1 because of all the volatility. So if you're buying a Bitcoin futures contract and it has 5 Bitcoin in it, and let's say they're all 5 are the Bitcoin's trading at 60,000. Take 60,000 multiplied times 5. That's 300,000 for the contract. You're going to be paying over $150,000 just for that futures contract. The other problem I have with these ETFs is that almost every ETF, with the exception of a few, are really not geared for the buy and hold investor. If you want Bitcoin, buy Bitcoin. Get a Coinbase account. Get a Binance account. Buy the asset. Don't buy the ETF. There's going to be a lot of what's called contango in these ETFs. That basically means that it's kind of like an option. It's going to have a lot of premium out there, and premium that is going to wither away as we get, every month. These guys, all of these ETFs, every month, all of these ETFs have to buy more Bitcoin futures. Now, what I believe is that all of these ETFs coming on board, this is not at all a bearish opportunity for Bitcoin itself. In fact, I expect Bitcoin is going to, if anything, get propped up because of all of this information and all these different ways to invest in Bitcoin. Because if all these guys are pushing money into the Bitcoin futures markets, Bitcoin futures are going to move up. The arbitrageurs are going to come in. They're going to sell those Bitcoin futures, but they're also going to be buying Bitcoin itself to squeeze those together. That is going to have a positive effect on BTC. All right. So what else am I going to be talking about here today? I want to get into, I really want to talk about stocks. I want to talk about Fang. So we got Fang earnings coming out here in the next week. Let's go in. Let's look at Fang. I'm going to jump to my screen here, and we're going to do a preview, a Fang preview with everyone right now. So even before I do that, I want to go in and look at, let's look at our stock charts. And we're going to start with the S&P 500. And we'll get to Amazon and Google here in a moment. But take a look at the S&P 500. Now, I'm going to update this to the latest so you can see what's going on. The S&P continues to jump up in value. Any of you that have been watching any of my YouTube channel, if you've been watching the stream, I'm going to show you something. We're going to go off topic here for a moment. I want to show you the money calendar. And I want to show you the money calendar, but not the individual stocks. I just want to show you the grid. Now, I'm going to take you back to September because we need to have a little teaching moment here. This is September money calendar, and I want you to take a look at the last couple weeks there. See those last few weeks of September? I mean, I can count them off. 1, 2, 3, 4, 9, 10. We had 10 days in that 20-day month where we saw more bearish activity happening than bullish. And when I look at that, that reminds me, it continues to remind me, and it should remind you, that over the last 10 years, the risk in the market has been in the month of September as a stock buyer, as a bullish trader, not October. If you take a look at what happened in the month of September, then you can clearly see, and I'm going to move over to that month. Let's slide this over here so we can look at it again. But look at the month of September. Here's September. This is literally was right after Labor Day. There's your high. Here's September 30th, almost the low. The lows came in right at the end of October, and we've been running up ever since. Back to the money calendar. Take a look at October's calendar. You can be quite thrilled if you're a bull, because every day in the month of October shows more bullish opportunities than bearish. And you can see here, starting with the 4th, and we're all the way out here in the 19th. Now, stock charts, this is the 4th right here, 4, 5, 6, and then we did get a little bit of a pullback. Nothing's 100%, but look where we are now. We're sitting on 450 on the S&P right now with all-time highs just 4 points away, right? So we've got a bullish stock market, bullish technicals, bullish seasonals, but we also have some earnings coming in. And before we get into earnings, we get into volatility, I want to share with you guys a couple more things. Let's take a look at let's take that flyover. The flyover is where we're going to fly over not just the stock market, but bonds, currencies, commodities, and yes, cryptocurrencies as well. Look at the bond market. The bond market has seen better days. In fact, if you look at the end of September, TLT, which is the iShares Barclays 20-year Treasury ETF, well, that hit 152 back on September 22nd. It came all the way down to below 142 before getting a bit of a rebound. I think if we stay in this range, this is going to be great for stocks. The bonds need to have a Goldilocks moment where they just simply kind of just hang out, sit on the rocking chair, rock back and forth. Okay, hey, look at the stocks walking down the street. Hey, get those kids off the lawn. This is what the bonds need to do. They need to retire for a little while from these big price moves. If the bond market can do that, then we see continued upside for the stock market. Even if we rock a little to the upside, that's okay too. Because if we're rocking to the upside, guess what that means? That means yields are rocking to the downside, which gives us that Goldilocks moment for the markets. UUP, here's another one that's rocking down. All right, we actually had UUP, if you look at September, we're just looking at the last 6 weeks. All right, beginning September, we saw UUP down here at 24.75. The highest we saw was 25.35. We're down a little bit. You might be asking me right now, why in the world are we wasting our time with something that's only moved 50 or 60 cents in the last month? Because those 50 or 60 cents, those little cents you see right there, are on supposedly the most stable currency in the world. So we want to watch this. Do I trade this? No. Do I want to watch it when I'm trading other things? Absolutely. Right. So that is UUP. USO, I blew this one. And I don't mean I blew it because I went the wrong direction. I just didn't see the forest through the trees. And if you come back and you see this area around 51, 51 was a great area. And let me back up a second here. Seasonally, this is a bearish moment for oil. Okay, oil had its bull this year. It was fantastic. But the bull was over in July. And then the bears creeped in. And that took us from around 50 on USO down to below 45. And I took that move. But I was looking for a short move since, and I haven't seen one. And in fact, I was so blinded looking for short opportunities in oil, I completely missed this technical area where everybody started getting long at 51. And all of a sudden, now we're trading up at 57. And we're talking about at just a couple weeks ago, at the end of September, we go above 51. And this would have been an absolutely perfect week to get into something for a couple of points. This was showing 300, 400, 500% gains on call options on USO in just the last couple of weeks. All right, so that ship has sailed. If there's anything I've learned about this, that is no matter how much your seasonals may be telling you to go in one direction, if we break out to new all-time highs, then it's okay to switch gears. And that's kind of the takeaway I had for this month for oil. But oil has been very, very good to me in terms of other things I'm in, because the oil markets bring up oil stocks. And as oil stocks go up, that puts pressure on the market as a whole. Okay, let's take a look at gold, GLD. So GLD had a moment where we were higher, but it's pulled back. All right. And what I'm talking about is today. But if you take a look at this chart's ugly. Ugly. 171 was the high that we saw back around Labor Day. We dropped all the way down to 161. By the way, that was a double bottom when you look at the summer. And now we're sitting kind of right in the middle. Again, I've said it here before. I'll say it again. I really do like gold as a long-term hedge to everything else that's out there, including cryptocurrency. But as a trader, I'm not liking this one so much because it's not giving me any signals. Okay. Now, I'm going to get into Fang, but those of you that are with me on the stream, if you want to take a look at your stock, your favorite stock, feel free to chime in and bring it on board with me right now. We'll take a look at your stocks in just a moment before we move into my next segment. All right, so Fang, the reason I'm looking at Fang right now is because we've got earnings happening for the majority of Fang here in the next week or two. Facebook's up right now first on my list of stocks to look at. It's got earnings in the next 6 days. You can see what's happening. The option traders have been pushing this up. Now, it first started moving up because Facebook started moving down because of the whistleblower. All right, so the whistleblower blew volatility into calls and puts. But look what's happened recently. We had a big spike up when we had that drop down. Since then, we've created a base here, right around baseline around 325. We've now had a couple of days where the market's moved up. But look what volatility is doing. It's still moving up. That's because now attention is turned off of the whistleblower. And by the way, my last, I did a webinar a couple of days ago. We were talking about Facebook. And I came out and said, I was on record for saying, look, remember Cambridge Analytica? Remember that scandal? Facebook seemed to escape that. They should escape this one as well. And it wouldn't surprise me if later on in the year, we're back to these all-time highs once again. Because at the end of the day, this company knows how to churn money out of its users, its user group. It churns that money out in the form of advertising. And really nobody does it better than Facebook, at least not now. But you can see this thing starting to move higher. We're going into earnings. There's a lot of call buyers coming in saying, hey, Facebook's coming out. There's a lot of put buyers coming in. And these put buyers might own Facebook stock. Or they might simply think that Facebook's ready to come down and make new lows. All right. So that's what we're seeing happening here. Apple. Okay, so Apple's getting a little bit of a run up too. And maybe I helped with that move in Apple because I bought a new Apple MacBook Pro on the launch yesterday, looked at it and said, you know what? I need a new one. I need to up my technology. I need to up my processing speed. I need a nice, cleaner screen. And I really need some longer battery life. If I could ever get back out to traveling again, by plane, for instance. So, so I'm adding to the revenue stream there for Apple, and a lot of other people are too. And what's happening with most people is they're starting to realize it's not about this thing. It's not all about the iPhone. I don't even have the 13, all right? It's not about the iPhone. It's about all the other things that they have in terms of monetization and creating that revenue stream, the online revenue stream, their member streams, their subscriber revenues continue to grow all the time. I would not be surprised if Apple right now is looking at Amazon and saying, wait a second, these guys just came out with a really sick looking online game. The reason I say that is because my kids are looking at this and saying, wow, this thing's kind of addictive. If Amazon can come out with an online game that's addictive, then surely Apple can come to the table. They're probably kicking themselves for not doing it earlier. They're going to be in there as well. All right, so Apple's moving higher. Right now, we're getting above these what I like to call stock chart peaks, which means Apple should climb into earnings in the next 8 to 9 days and continue to move higher before the announcement even comes out. Let's look at Amazon. Amazon too. I mean, we've seen Amazon's highs in the last month are around 35.50. We just pegged, and I think we hit that 3,200 level now 4 times this year. And we've now bounced off that level. Here we are, 34.97. It's off a little bit today. But again, we're starting to come into earnings, and you're going to start seeing that IV graph, that red line, start to accumulate and move higher in value as we get closer and closer to Amazon reporting its earnings on the 28th. Google. Best long-term chart of the year, if you take a look at it. But short-term, we had a high at 29.40 back around Labor Day weekend. The lows came in at 26.20. So we had about a 300-point drop here during the month of September. October has seen us climb almost back to the highs of September. And my expectations are, with earnings coming out in the next 7 days, we'll already be at new highs before the earnings report is even released. Netflix, this is the big one that's on tap today. Earnings on tap today for Netflix. So I look at Netflix and I see Netflix, as I'm going to use Netflix as an example today. I am not trading Netflix, and I suggest you do not trade Netflix the way I'm going to show it to you, because it's going to be showing you an example of how 99% of the traders out there, the other traders, trade this stock going into earnings, right? Then I'm going to show you how I trade stocks going into earnings. So that is Fang as we round everything out. And if you got a stock you want me to look at, just throw it in the comments section right now, guys. And a quick hello to Leonard, Teresa, Southside PR. Good to see you, Napoleon. And Rice is asking about Bitcoin breaking all-time highs. We're almost there. In fact, it's not even, I'm looking at breaking all-time highs by the end of the month. It could happen by the end of the week. It happened by the end of the day today. And but I do see volatility. We've been kind of cranking in a little bit on BTC. Take a look at it right now. This is a day chart, and if I squeeze this in a little bit, you can see really right here. Let me back this up. So if you take a look at October, for instance, there's October. Here's BTC down here near 40, and now here we are above 62,000. This is really a 50% return, and that 50% return really happened between the September 28th and October 14th. So it was really about 16 days to see a 50% return on this cryptocurrency. Now, what has happened since then? 62,910 was the high on the 14th. That's higher than we are right now, although we are trading in that 62 range. Now, the thing that happened today that I thought was interesting is this. Let's take a look here at, lost my mouse there. Let's see if okay, regained. Let's take a look here at, where is it? The 5-minute. So coming into the 5-minute candle, look at what happened here at, this is 10:30. I want to squeeze this over a little bit more. And now I'm going to have to use both my hands, because that's what happens when I lost my mouse. So now I'm going to be doing this a little manual style. 9:35 a.m. There we go. It's back. 9:35. We hit 63,293. That's not very far above where we are right now, right? The all-time highs, if you were to look at BTC, the all-time highs in BTC are in the 64s, just around 64,000. So 64,000 is a push number for me. What I mean by that is that if we hit 64,000, then we're going to see a lot of futures traders that went short this market this morning because that ETF came out. They're going to be rethinking about that short if we get above 64,000, and they're going to be buying back, and they're going to add to the buying binge that's going to happen here with Bitcoin. Now, that's BTC. If we were to look at something like Ethereum, look at a couple of other ones, we might see something a little bit different. All right. Ethereum is actually underperforming Bitcoin right now because all of the excitement is surrounding BTC. I do believe that if BTC breaks above 64,000 and moves higher, that tide is going to raise a lot of boats in cryptocurrency. All right, let's take a look at a couple of stocks, and then I'm going to move into today's session with you guys. So back to stock charts. All right, so let's start off with Mo with BBIG. I'm punching BBIG in here. Now, I might have to take Vinco and a few of the other ones and kind of stretch them out a little bit. So instead of 40 days, let's go out there and let's put 100 days on the chart, because 100 days is going to bring me into a couple of different areas here. So BBIG, all right, Vinco Ventures, not something that I follow, but it is optionable, okay? And you can see this $2.50 stock down here that came out of earnings back near the end of August. Ran up to 12, has come back down. This is one of those stocks. And this is what I'm going to call the exception. The exception on this stock is that look at the volatility on it. That's the red line. That red line is not a moving average, although it sure looks like one. That is the options implied volatility. That's the options, what the options are trading for as they get cheaper, expensive. Now, most of the time with the stock, as the stock price runs up, the options implied comes down. But with a few, Vinco being one of them, the options are running with the stock price. As the stock price goes higher, the options get more expensive. As the stock price goes lower, the options get cheaper. And some of you who may not be understanding me, what I'm talking about is I'm talking about time value of options, not the actual physical price of an option, but it's time value. What's in there in terms of time? Okay, let's see. So Leonard wants to take a look at RIG. So from BBIG, we're going to go to RIG. And RIG is telling us a little bit of a story here. This has been, I remember when these shippers used to have some actual price behind them. They used to have some market cap and some weighting behind them. And they really fell out of favor in the last few years because they've gone from transportation to just vessels that have been sitting around with oil in them. Well, that's not the case so much anymore. You can see that even though RIG did have a bad earnings report, this was back near the end of July, beginning of August. We've seen some catching some bids down here around 3. Little head and shoulders pattern. Now we're getting into a bullish pennant. And I suspect with earnings coming up in the next 13 days, this one could run up into earnings. There's a potential that can happen. The other thing that could run up into earnings, look at that red line again. Options implied volatility could run up as well. So, when I'm looking at this one, if you like the stock, buy the stock. But if you like the options, don't hold on to them past earnings, because look what happened the last time someone held on to those. They were up here during that week of earnings. As soon as earnings came out, drop. We went from 125 vol down to below 90, and within a couple of weeks, a week later, we're down to 75. So what we're talking about is we're talking about time premium that gets cut in half after the earnings are announced. You don't want to be hanging on to an option with time value, with that time value dropping in half in a matter of a day or two. No. So that's RIG. So let's do one more. Joe's got PLTR, Planeteer, PLTR. Oh, got a few more in there. PLTR. All right. Optional stock. And Planeteer is looking, really, it's been kind of a boxy trade, but we do have a lower low that occurred in July. And then again here in October, we have a higher high that happened in June. And then once again in September. If we were to follow this pattern where we see, the market moves down in about a month, and then it takes about 2 months to move up, and then about a month to move down. And so if this is correct, then we should see this move up happen between now and mid-December. So 1 month down, 2 months up, 1 month down, 2 months up. Think about this as a longer-term trading opportunity. Yes, the next earnings are coming out in 23 days, and you could follow it that way. And if you look at earnings, what happened, go back 23 days and see what happened into earnings. And earnings did move this up, but look at the volatility. I mean, we went from 45 vol up to above 80. Then the earnings came back and then dropped right back down below 45 in a matter of a day. So again, the stock looks like a good buy and hold it in the next couple months. The options, if I'm buying, I don't want to hold past earnings because that's where you're going to have a lot of time risk happening. All right. So that is PLTR. All right. Let's switch gears, guys, and let's talk about what's cheap and what's expensive out there. So what's cheap and expensive means I need to go into options and I need to go to my rankers. Yeah, my rankers. And then come down to what's called the morning report. Now, I do this because this will show those of you who are Tom's Option Tool members where you want to go. Again, I'm going to options after logging in, rankers, and I'm going to come down to the morning report. The morning report is a report of 6 different lists. So I can look at the expensive IV, the top 10. These are all top 10s. Top 10 expensive, top 10 cheap. All right. Also top 10 unusually high call option volume. And these are actual option prices on various stocks. Unusually high put option volume. I got the top 10 there. And down at the bottom, I've got highest option volume and highest open interest. Now, something else I have for those of you that use our tools, we also have something called stocks appearing multiple times. Take a look at Bank of America. It's on this list 3 different times. So I see it here as a highest option volume. I see it here as a highest open interest. Okay, 2 different strikes. I've got the January 21st, 45 calls, and the October 29th, 50 puts. If I come up here, you'll see that they're also being shown as an unusually high put option volume, and that is the June 17th, 2022, 33 puts trading at 69 cents. So there's a lot of activity out there for Bank of America, all right? But you can get access to all of this, and we're going to look at the expensive IV in a little more detail. You can get access to all of this if you haven't already. Download my app, which is called the TG Suite app. I'm actually going to change the name of it to Tom's Option Tools in the process of it. But right now, it's called TG Suite. If you download TG Suite, and I'm going to show you what this looks like on the phone. So I'm going to bring this up on the phone right now. So for that, I'm going to need to mirror my phone so I can put it right on my screen. And of course, this doesn't happen very quick because it's got to do a little handshake. It's got to say, hey, type in this password. Once I put the password in, then we should be able to move on. And there it is. Okay. Hope I got that right the first time. Now, what's going to end up happening is my screen is going to mirror, and there it is, right on the stock. And so let's go ahead and take a look. This is what TG Suite looks like after you've installed it and after you've logged in. If you have an account with Tom's Option Tools, and we have a 14-day for $14 program going on at tomsoptiontools.com, right? You can get there just, again, typing in tomsoptiontools.com, and you'll see the new special we're running right now, 14 days for $14, pick any plan. But let's go in and look at the calendar or the apps. The apps we have apps that are included in that 14 for 14. But if you're not a subscriber, it's okay. Once you download this app right here, all right, you're going to log in. You don't have a login? No problem. Go down to the bottom where it says non-subscriber login. Follow those rules. That'll take you to this page you see right here. Now, all of these are premium services, these first 7. But this last one, it says MR on it. That's the morning report. That is available to everybody. Click on the morning report. And I'm showing you the morning report because I want to share with you what this looks like. I'm going to put it right next to the morning report that we have here. So here's my morning report. And let's slide this over. And I'm going to click on expensive IV with my finger. Bam. Take a look. There's Boyle. There's AMED. There's HCI. UNG is on this list. Mattel, VFC, STX, ISRG, ICLR, and Snapchat. So I can go in and look at each of these just like I can on the software. Now, if you're a subscriber, you get to do one better. You can actually click on the symbol and bang, you're going to get the chart and you can see the implied volatility, right? And just like BBIG, the pro shares, this commodity is running in volatility with the price itself, this natural gas share. Let's look at UNG too. That's on the list as well. Look at UNG. UNG was below 11 back at the beginning of summer. UNG has ran up and gone as high as 22 before pulling back now. But you can see the implied volatility is running as well. Still expensive even at this price. Snapchat, that was the last one I want to look at. So Snapchat, we have earnings coming up in 2 days on Snapchat. That's why you're seeing Snapchat's IV raising in price as well. I expect that that IV, those calls and puts, are going to continue to get more expensive until the earnings come out, and then you're going to see the washout happen in time premium on these options. All right. So there we go. Let's get rid of that. That is the expensive option list for today. All right. So we have looked at cheap options and expensive options. We have looked at the market overview of cryptocurrency. Now, I want to move into the remainder of our time together today talking about trading straddles. Okay. So got a couple trades for you too, right? Some real-time case studies I'm going to be sharing with you. But before I do, let's just do a quick little overview on straddles so I got an idea who I'm working with here in the room. All right. So what is a straddle first? If you've never experienced straddle trading, this is the ability to buy a call option and buy a put option simultaneously on the same instrument using the same strikes and same expiration dates. What I'm doing is I'm combining the cost of the call and the cost of the put to give me the price of straddle. It's what we refer to as delta neutral trades or non-directional trades. Okay. So putting something like this together, let's go ahead and I'm going to share with you how this would work. So we're going to take Netflix right now, and I'm going to show you what a Netflix straddle would look like if I were to put this on. Now, in this case, we're going to look at buying the October 22nd. Those are the ones that expire this Friday. Okay? Because I'm going to tell you what, most people out there, hopefully nobody watching this channel, most people out there will look at earnings coming up on Netflix after the bell today, and they're going to say, you know what? I don't know whether Netflix is going to go up or down, but I think it's going to go up and down a good bit. So rather than buy the call and be bullish or buy the puts and be bearish, how about I buy both? That way I can be right if it goes up and I can be right if it goes down. And it sounds good in theory, but this is not the way to trade straddles. First of all, you're overpaying for this particular straddle. And I'm not talking about price. I'm talking about the fact that you're overpaying because guess what's going to happen tomorrow? After Netflix announces earnings, the time premium those options is going to get washed out, especially since these options expire in a few days from now. That's one of the biggest problems I have with this one. The other biggest problem I have with this is it is pricey. Take a look at these calls. They're $17.45. Look at the puts, $19.38. That's right in the middle between the bid and the offers. So even if I could get these prices, they're still expensive. Now let me share something else with you. Here's my risk graph on a straddle. Now I look at this and I think, okay, here's where Netflix stock price is trading right now before the close of the day and the earnings are announced. What I need to be looking at if I actually own this is I need to see Netflix up here above 676, I believe, and it's got to be down below like 607. Oh, 603. 603 downside break even, 676 upside break even. We got to be above the upside break even because that's the cost of what this call and put together is going to cost me, and I need to be above that by Friday to make any money. Or I got to be below 603. Again, you take the cost of the straddle and you will add that to and subtract that from today's strike price, the strike price you used to get your break even at expiration. This is not how I trade straddles. It's too expensive. It's too risky. I want to buy straddles as a pure volatility play. And if for some reason the price happens to give us a jump, okay, we get a jump in the price, well, so be it. That's fantastic. But I'm doing this as a pure volatility play. Let me show you what I'm talking about. All right, so how I like to trade straddles and avoid the risk. Again, what are the risks in straddles? The risks are delta risk, meaning lack of direction. Theta risk, that's time value decaying with you as you get closer to expiration. And vega risk or volatility risk is what you have if you try to trade one of these things through an earnings report. These are problems for many people who've tried straddles. And I know a lot of folks who've traded straddles and they've tried it once or twice and said, nope, this is a losing proposition. But where that's a problem for many people, it becomes an opportunity for a few. So let's talk about how I trade straddles. What I do is I measure volatility. I measure when people come into the options and I measure when people go out of the options. And I've been measuring this and really developing the strategy for over 10 years now. So we look at these during earnings season and we look at scalping these straddles. Kind of like a ticket scalper, okay? If you have tickets to the World Series this year and you've got them already and you can't go, all right, you could sell them. You could sell them. You don't have to stand out in front of the stadium anymore to scalp tickets. You can actually do them online. with Ticketmaster and StubHub. And all of a sudden now you're selling tickets that were face value at a market price, and people are bidding them up. And as we get closer and closer to the World Series, the game you have tickets for, depending on all the excitement that's coming in, that could yield a larger ticket price. Now, the fact that the Rays aren't in the World Series this year, you're maybe not going to get the kind of prices you would if they were, because guess what? They won the Super Bowl. They also won the Stanley Cup. And if they could have made it to the World Series, I think those tickets would have been extremely expensive, because they were looking at the city that was going to do something that that some cities just haven't done. I think that Philadelphia did it back in the 80s, where they had all their major teams win an event and win the big thing in the same year. Hasn't happened in a long time. Anyway, you get where I'm going here. Much like a ticket scalper, we like to get in and get out before the major event begins. The worst thing you want to do if you have tickets to a major event is sell them at halftime, because by then half the show's over and those tickets are diminishing in value very, very quickly. They're going to be worth nothing at the end of the event. Maybe something for a collector's item, but that's it. And options, time value and options are literally the same thing. So what I do is I look for patterns. This is one we shared with a group last week. This is Halliburton. So Halliburton, if you take a look at this price, you'll see the stock price, you'll see the implied volatility, you'll see these three green arrows on my screen. Now I'm going to put the red arrow over here and show you where I'm at. Back in January, we saw the price of Halliburton going up before earnings. Then the earnings came out and Halliburton dropped down. Back in April, we saw the price of Halliburton going down into earnings. Then the earnings came out and Halliburton proceeded to go up. And most recently, in July, this is before today's earnings, Halliburton came down. We had the earnings, price gapped down and started moving higher. So we cannot, with any kind of historical certainty, predict what Halliburton's going to do before earnings. Sometimes it goes up in earnings, sometimes it goes down in earnings. So throw price right out of there. But what we have noticed is that as we go into earnings, the implied volatility on the calls and puts have increased in value much more often than not. So that means call buyers are coming in, put buyers are coming in. They're bidding up these option prices, and they're hitting those offers, pushing this thing higher. And what's happening? Well, they're creating opportunity for folks who buy these calls and puts before mainstream media starts talking about it, and they sell them right before the earnings announcement. That means in the last hour of the day prior to that earnings announcement, regardless of whether it is after market close or before market open in the next day. So with Halliburton, we looked at a straddle. So each time the option premium spiked before the announcement. And so we look at this where we buy on the lower end of volatility on the rise, and then we sell. And we do it again and again, and we're just seeing this pattern. This is a pattern that's much easier to predict than price. So why not trade both ways, but look at getting out of it before the red light. This is the straddle we talked about last week with Halliburton. We were looking at buying the October 22, 24 calls. At the time, the straddle together was going for $1.75 or better. Now, Halliburton announced its earnings early this morning. What happened is the stock actually climbed up to 26 and change. All right, climbed up to 26 and change, but also I want to mention that the option implied volatility climbed up as well. Well, here's what happened to the trade, getting out of it yesterday before the close. That $1.75 straddle, well, the calls were worth $2.32. The puts were down to almost nothing, but they were still trading for 3 cents. Together, this $1.75 option straddle, this combo, was trading for $2.35. That's a 60%, or excuse me, a 60-cent return or a 34% return on investment. And we didn't have to predict price. All we did was go in there and scalp this thing. All right? So let's talk about scalping some earnings today. It's all about spotting rules-based opportunities, creating low-risk, high-probability trades, and that's what we're doing with straddles, and planning, executing, and managing them from start to finish. So I want to look at a couple more. So I want to share with you, by the way, look at Halliburton stock price today, right? Now it's up 26.89, but look what it did this morning. It came all the way down to near 25. That meant that straddle, I know what that straddle was trading shortly after the market opened this morning. So it closed yesterday at 235. It opened this morning, and it opened this morning around $1.60. So it was actually below the price that you were able to get into a week ago. So again, I don't like trading these things into those earnings, but here's one I like trading them before earnings. So take a look at this next one that we're looking at, which is Visa. So Visa, and again, I'm doing this work as of last night. So Visa closed at 230.25, and I see that the October 29th call and put are going for about $8.05. They're around $8. They were around $8 this morning. So I look at the slippage on the stock. I look at the slippage on the options. I look at the calendar to earnings. So 8 days from now, we've got earnings coming out. And so what I did was I looked at this, and I also looked at what was going on in the last 4 cycles. And so the last 4 trades where we were looking at Visa 7 to 8 days before earnings, this is what happened. Back on the last quarter, we had July. We had to buy on July 20th and sell on July 27th for the calls and the puts. Both of those turned in together a 15.85% return. The quarter before that, it had 9.73% return. The quarter before that, 17.65% and 115% return back in October of last year. So apparently Octobers bring the most return. And guess what month it is? It's October. So I'm looking at this one for $8 or less, buying that Visa straddle, the 230 calls and the 230 puts for October 29th. But here's the thing. This is the important part, guys. So the last 4 quarters, this was a winner. What I'm looking at is buying it now, but selling it by the close of the markets on October 26th. I'm not hanging on to this thing till October 29th. That's not the plan. The plan is to get out of it prior to the earnings announcement while the volatility is hot. Because guess what's going to happen after October 26th? The news, the unknown is going to become known, and then guess what happens? Then we get a big drop in premium. Yeah, Visa might pop the new highs. It might drop down, but more than likely it might stay in a range. And range bound is not good for us. So why take the chance? Let's scalp this thing. Okay. Now, another one I'm looking at is AMC. And AMC, AMD. And AMD has the exact same characteristics. What I'm looking at is I'm looking at the October 29th. In this case, we're looking at the 116 straddle. 116 call, 116 put, and guess what these are going for? You got it, a little more than $8. $8.16 is what they were going for just a couple of hours ago. Now, the plan here is very similar. Looking at buying the straddle now before everybody starts talking about it on mainstream media. Then all the talkers and all the talking heads are going to come on, and the analysts, you know those analysts, they're the ones that are telling you what to do, but they don't own any skin in the game, those analysts. And as that generates more, that's advertising to me. When something's on mainstream media, it's being advertised to millions of people who will then decide, oh, I think AMD is going up. I'm going to buy calls. Or you're going to get some folks that I think AMD is going down. I'm going to buy puts. And all that call and put buying is going to raise these prices, these options. And I want to ride this right into, but not through, right before earnings and then sell. And that's my plan with AMD, is the same thing. Now, I'll be very transparent with you here. I don't believe in front running. I never front run. So if I'm in something, I'm going to tell you I'm in something. I've been looking at these here very recently. All right, Visa and AMD. So I have not taken trades on this because I don't want to take a trade and then tell you that I like this trade. I don't do that. All right, full transparency. I'll look at this and I'll take it. For me, I'll take it tomorrow. That way I give everybody out there a day's head start, and then maybe I'll jump in tomorrow if the price is still right. What am I looking at for these? Well, I'm looking at, if I can get 50% on the entire straddle, I'm going to get out way before earnings. If not, I'm planning on getting out before the earnings event actually happens. All right. Let's see what we got on here. Yeah, Delta Neutral is definitely an Optionetics rule. You got that right there, Larry. Absolutely, without a doubt. We do talk about, we talked about Delta Neutral since the early days of Optionetics as a definite for sure. Let's see what we got going on here. So appreciate you, Mo. I appreciate that as well. Question from Napoleon. Tom, do you both call and puts on Tom's option tools? Yeah, we do have both the calls and puts. We look at calls and puts on every single optionable stock. Now, I don't trade calls and puts on every single optionable. I actually, say if there's 3,500 or 3,800 or 4,000 optionable stocks out there in ETFs, I probably trade the top 10% in volume. I tend to stay out of the areas where the bids and offers are just too wide. That's my thoughts. Shopping cart boys, thoughts on FSLY today. Let's go take a look at FSLY. And to do that, I need to get to a chart. Let's pop on up here. Let's take a look at some charts. FSLY. If it's optionable, then I've got it on here. There's Fastly. Take a look at Fastly. So Fastly has earnings in 15 days. And what you can see here is, again, I'm going to take this back. Let me take it back 200 days here for you. And then we'll get in on those last 30. So take a look 200 days ago. Earnings. All right. So this thing dropped just after earnings. You saw the rise up. You see the little drop after earnings. The quarter that was in April, again, we dropped down into earnings. Earnings came out, and then we had a drop as well. The quarter before that, we had a drop into earnings. So it looks like the week prior to earnings, Fastly seems to drop those 3 or 4 days in. If that's true, maybe simply buying some cheap at-the-money puts on Fastly the week prior to earnings might make sense. It may make some sense there if you're looking at it as a strict earnings play. I want to show you something else too. Look at these IV levels here. All right, shopping cart. Do you see this? You went from 75 to 125. Back down to 60, back up to 125. Back down to 60, back up to 125. Back down to 60, and we're back at 55. And look what's happened here. The word is out. The word's out. Oh, I got to talk into the microphone. The word is out. Mainstream media must be starting to talk about this, or people are getting into this vol right now. But you know when the smart time to get out is? Up here, up here, up here. You know when that happens? Literally the day before the earnings announcement, or right before the earnings announcement. Because if you're in it afterwards, you are taking it on the crush. Take a look at the last 30 days, and you'll see. I mean, yes, volatility came up a little bit as it came down. That's going to happen with most stocks. But look what happened on the rise in October. Volatility moved sideways, if not slowly down. It started creeping up 2 days ago. Because more and more people are starting to realize, wait a second, these guys are announcing earnings pretty soon, and I need to jump in line and start buying my call options now, or buy my put options now. I would say take a look at this one. Maybe wait a week. Maybe look at it again a week from now. And the reason I say wait is because it looks like the pattern is the last 7 days, that week prior to earnings. Next thing I'm going to tell you, which is the last thing I'm going to tell you, is this, and this is for all of you. It doesn't matter how good something looks in the past. There's no guarantee that it's going to happen in the future. All right? So there is something. And I think I've gotten almost everybody here. Space, SPCE. So, hey, have you guys seen, I'm not a big fan of Saturday Night Live, but I watch it on occasion. I just don't watch the whole thing anymore. But there was a couple weeks ago, they did something with Star Trek, and it was called, I think it was called Billionaire Quest. and it had Elon Musk, Richard Branson, and Jeff Bezos in space. Got to go see it. Hilarious. All right. But take a look at Virgin Galactic. What happened here? This big drop happened to do with them pushing back their timeline for space travel. If you know what, guys, this is happening. This is happening, and it's going to happen big time on a private scale. I don't know if Virgin is the one to be in, or if it's SpaceX, or if it's going to be Blue Origin, which is really Blue Origin right now. I don't know if it's one of those three. I don't know which one it's going to be. But what we're going to see is we're going to see private space travel happening. And I think one, if not all of these guys, are going to figure out how to monetize more than just putting humans in space. Okay. It could be space mining. It could be space trash. It could be becoming a transportation carrier and getting those lucrative government contracts. It could be all of the above. But in any case, you're going to start to see a turn on these private companies, and they're actually going to start, once they figure out how to make a buck in this area, and even before then, these stocks are going to get exciting once again. It's going to be kind of like the marijuana industry, where you first heard about it, everybody gets excited, then it drops. Then they start to make money and then the cream of the crop slowly rises up. We'll figure out who that is later on in life. But right now, as a trader, I have to look at this and say, if we go below 19, we're going lower. If we momentum above 21.5, we could come back and fill that gap and be back to 24. That's what the technicals tell me on SPCE right now. Now, something I like to tell you, or more appropriately, ask you. If you find these videos to be worth your while, then do me a favor, and you know what I would like you to do. Hit the thumbs up below, like the video. It helps support the channel, okay? You guys probably know by now I don't really need to do this, and although we do monetize the channel, I do push 100% of the profits of this channel to charity. And in fact, what charity did we donate to last week? I'm going to bring it up here on the phone. Let's see if I can find it real quick. Oh, the George Lopez Foundation. I should have known that. Shame on me. We donated thousands to the George Lopez Foundation just last week. So we were excited to do that because his foundation supports a lot of good causes. And so we went out there. We do various charities. I try to do them once a month, but we're excited to push that out there. So all the revenues that we have that come into the site, and that includes donations that you make, and you could donate to the channel. There's a way of doing that below the screen right now. But even by liking the channel, by sharing this with others, by subscribing to the channel, that in turn helps out these charities. All right. It's not helping me. So guys, with that being said, I want to thank all of you for joining me today. Have a great rest of your day. And I'll see you again sometime next week. I'm putting together some videos right now. It's taking me a little longer than I want on my best solar stock and my best lithium stock. And I'll be sharing those with you from the expedition vehicle. So we're going to do a little expedition vehicle, talk about those two stocks. I might make that a two-part series. So we will definitely have some fun with those in the coming weeks. All right. All right, guys. Hey, thank you very much. Have a great rest of your day. We'll see you again next week. Bye now.